Welcome everybody, Doug McKay with the M48 update on the 28th of April 2010, looking at a chart of the day of Burger King BKC. And yesterday we put this back, or 2 days ago we put it back in the table as a buy. And the reason I wanted to bring this up today, first of all, we've been in and out of this position profitable once. We were looking to re-enter, and what we did is we talked about re-entering with a close above 22, and we never got the close. We traded above it intraday on the 26th. We got as high as 22.16, and then yesterday, the 27th, we got as high as 22.19. So again, it's important to go with a close as opposed to intraday. As a matter of fact, this looks more like a short right now. But in any event, we'll keep it in the table in the perhaps it will catch support here. If it moves higher, we'll take a closer look at it. But I wanted to bring that up again for educational purposes in terms of chart of the day, looking for closes as opposed to trading intraday. We could say the same thing about RIM. We talked about RIM. We said that we would be looking to re-enter RIM with a close above 73.50. Again, the word being close. So yesterday we got as high on RIM as 74.23, but closed lower. I mean, it's still a decent looking chart provided we hold this 67.50 and maybe even closer to hold a low in this candle, which is 68.44. But this trade is still probable. Again, we're looking for a close above this area here of 73.50. And then let's take a look at the SPY. This was the still chart that we put out yesterday, and let's just leave this on here for now. And we could actually pull up the S&P and achieve the same thing. But what we're looking for, we talked about support, only getting hit so many times, and it usually will break. Same with resistance. So we're only going to test the 118.50 range so many times, and we're going to break through it based on probabilities. What do I see, and what was I referring to in the copy? Possibly on the SPY or the S&P cash, we trade up to this the underbelly of the trend line here. If that occurs and we don't go through it and we start to roll over again, that will increase the odds of this market going lower and us stepping into the SH. Here's a clear picture here pulling up the S&P cash SPX. So again, we're in this 1180 range. If we get up to maybe 12, start to roll over again, maybe a little higher between 12 and the underbelly of the trend line, and then start to roll over with increased volume, I think we're going lower. And at that point, we will enter the SH. Again, we never know exactly how long the trend will last, the velocity of it. So we have to take each trade. The one that you don't take is the one that runs. And we don't want to be out of a market that's declining. We want to be shorting it. Okay, let's see. Gold still looks good. McDonald's, I'm just going through the table. We shortened up the table. Let's talk a little bit about oil, and then we'll shut it down. Let's finish up with the chart of DIG. And we've got our stop on DIG at 38.0. Actually, I'm sorry, not DIG. We actually we have our stop on DIG at 35.83. 35.83. So we're very close. At least we were the other day in terms of holding this support area. This area here of 37 is major support. So we'll see if that holds. If that doesn't hold and we start to break down further, we'll probably adjust our stop on DIG. Gold, there was a little bit of profit taking today, but it had a nice move up yesterday on increased volume. We drew this in the other day. Once we traded above this level, that was a good sign. We've also moved up the stop on gold. We'll cover the two stops. Gold, our stop is 109.02, so we're kind of in this range here. And then also on NG, this was a nice move. We'll finish up with this. We've moved up our stop to a little over $8. But you can see good move yesterday in a down market, and obviously a good move today. So that's a nice chart. Okay, guys, that's it. We'll see you Thursday or Friday. Doug McKay with the M48 update on the 28th of April, 2010. The trend is still long, but under pressure. Thanks.